the sellers, and we get the market moving again. And Bitcoin, we're going to look at something very, very interesting today. I've got this global money supply M2 script from a guy called, I'll get his channel just to give him a shout out. He done amazing work. From a guy called Colin Talks Crypto. He's one of the first few guys that actually found and created. He actually created the script. Yeah, he put all the countries' money supplies all together in one script, which is now the global money supply, as represented as that. And I've moved. So the black line is the global M2 money supply, and the orange line is Bitcoin. I've moved this by 72 days back. So yeah. So when you have it in neutral, or when you have the chart as neutral, like how it is, it will look like this. It will look like this, okay? When you move the chart 72 days ahead, right there,
behind,
you get a very, very good correlation with Bitcoin. And as I've heard from his videos, the correlation is 84% correct. So every movement, like it totals to 84% accuracy. And it looks like Bitcoin is literally following the money supply like to the T. It's going up. It's doing exactly what the money supply is doing. And the money supply is now, it's already consolidated and it's moving up. So it's literally telling us what's going to happen in the future in the next 72 days for Bitcoin. And one thing that's even better is the total crypto market cap. So the total crypto market cap on the weekly is moving up from this ascending channel, right? And when you go on the daily and you turn on the money supply here, it looks amazing. Look at this. It's literally telling us this is the bottom, right? So, and it's correlating with the bottom of the channel as well. This is I find this a lot more accurate, like beautiful than the Bitcoin one. Don't you think, guys? Look how accurate this is. But yeah, that's all I had to say, to be fair, about total market cap and Bitcoin. If you want to go dive deeper into it and look at the price action, that would be awesome.
Yeah, I'll touch on something before it kind of moves on to some of the price action. I guess with the money supply and everything, a lot of people don't actually know what the money supply actually means and what it actually does. And that's just macroeconomics kind of like information that not a lot of us are taught. But macroeconomics is something that I've learned for the past couple of years, something that I studied whilst I was in college and whilst I was in university as well. But the M2 supply is definitely something that's going to be kind of like a key factor within this cycle and this bull run. And a lot of it will be down to the increased liquidity that will be available for market participants, especially like businesses and consumers. Where we have like lower interest rates as well. So it makes it easier for people to borrow. It makes it easier for businesses to borrow as well. And it leads to further investment as well. And especially in terms of like economic growth. And that's something that Donald Trump's been talking about a lot. I mean, when we had the last increase for like quantitative easing, and when last time we had, the M2 kind of like explode was COVID period, where a lot of money was like funded into the economy so that it could boost and stimulate growth. And we haven't had that recently. I mean, you've mentioned it multiple times that we need kind of like a factor that's going to happen that makes, printing and a lot of quantitative easing. But the tariffs is something that's indirectly kind of like impacting that as well, in my theory. I mean, Trump doesn't have to directly impact it, but raising the tariffs itself, it makes it more expensive for domestic prices. It increases the wages as well, and it kind of like forces the Fed's hand indirectly, which a lot of people ain't really like looking at into too much detail. But I've kind of like studied macroeconomics for the past I'm not sure however long it's been, multiple years. But a lot of crypto investors don't look at it, especially meme coin traders as well. But I guess that's something that we'll be learning whilst we're here as well. I don't know if you want to share my screen, can I just touch on something as well that I've kind of like had in the past couple of years from someone called Tech Dev. I mean, I think I've shared you this guy before previously. He's been so accurate with everything that's happened previously. But a lot of things that people ain't really looking at as well is the Chinese 10-year bond yield, which is something that has a direct impact on crypto as well. And when you couple it with the US money supply, the M2, whenever it makes a bullish crossover, we always have like a BTC run, which a lot of people haven't figured out yet as well. I've just retweeted this on my page as well. So if anyone wants to have a deeper look at it, you can take a look. But the divergence performance in government bonds and the Chinese 10-year yield has been a theory that's been talked about since 2022 recently. I think this is a letter, it's an article that I've kind of like paid attention to. They've got a Twitter as well. It's the Kobayashi letter, where they've talked about it in multiple ways. But the Chinese 10-year bond yield also has an impact on the cryptocurrency prices. So when you want to look at the prices of Bitcoin, when you want to look at the prices of a lot of these stocks that we have, you have to take into more into account the macroeconomic feasibility of the country's performing, the GDP. There's so many factors that you have to take into equation, but there's direct indicators with DM2 and with the Chinese 10-year yield. So that is definitely something that you want to be looking at when you kind of want to make your decision. If you want to invest in crypto, if you're not in yet, just look out for those indicators. Sorry, Kana.
No need to apologize. You hit the nail on the head, brother. Like, I think, and this is what I love when we talk about this kind of stuff, is it brings more awareness to the different aspects of the money flow. And you hit the nail on the head as well when we were talking about these tariff wars. Markets hate instability and uncertainty. And right now, with what's going on with Trump and the tariffs, I honestly believe it's posturing. Like, he knows he's not going to get these massive numbers that he's throwing on Canada, Mexico, China, and Europe with the recent 200% online and things like that. But what he's wanting to do is to bring people to the table to realign the American economy a bit, and you ask for 25 and you hopefully settle on 8 or 10 or whatever that magic number is, and I think that's what's happening right now in this tariff war, is this posturing of, we need to, he wants to renegotiate everything. And I mean, he's bringing out laws and crazy stuff to fuel his fire at the moment. But I don't think it's going to last for too much longer. And I think with last week, we had, a ton of market data with PPI, the job numbers that Mr. GOAT3D was talking about earlier, and things like that. And right now, big money is, for lack of better words, sphincters are clenched. They don't like this uncertainty. They're sidelined. They want to know what's going on before they dump it in. And that's where opportunities are made. You guys have known me for how long. I'm always, don't be a sheep, don't sell fear, buy it. The whales accumulate when people are in panic, and this manipulation is to create panic. And I wouldn't be surprised to see, lots of big buys from whatever his fund is, the World Equity Fund or whatever it's called, and a few others right now. But yeah, let's dig into the money flow cycle. Why not? So let's zoom in on my screen. Sorry, I got multiple computers and things going here. The total market cap is all the money in crypto and how it relates. So here we're looking at 3 days. We were in this consolidation box for a long time. We broke out here at the end of February, and we're trying to curl, right? The belly of the micro bear and the micro bull is what you hear me talk about a lot. And it's starting to look like we're starting to see these areas where it's cooled off. We found a bottom and things like that. And we want to see movement to the upside. Obviously, we're going to see some resistance at this 2.84. Then we're going to see resistance at, the psychological level of 3.09. And as I say, I always do this kind of quick and dirty. And if we zoom in, when we were talking on the daily, we drew this rectangle last time, right? And I was saying I was going to be looking for consolidation, and this was a while ago that we last met now, because we missed last Sunday, between this 2.45 and this 2.73, 2.8. And, you know, we wicked just below it. And if we go back, you know, we could have probably cleaned this up a bit and caught that wick proper if we moved it to these candle bodies there. Actually, just out of curiosity, if we do move it to those candle bodies right there, we're just below that wick. So that's what I mean by quick and dirty. It's not TA is not an exact science. It is to paint a picture, you know, but you can see where we rejected. You know, we rejected at the top of this wick up in here, where we had break in here, and boom, right here. And part of this rejection was the news last week. And I believe we will probably consolidate this week as well. I don't see rockets this week. I think we'll probably consolidate in this area here, 2.6, 2.5. We might get some more stinky wicks because we have retail sales month on month, not a big deal. Building permits, yeah, housing starts, yeah, it affects the market, but not as major as this last one right here. I thought we had inflation. Did I not? The interest rate. There it is. Yeah. Sorry. You know, and I think until we have this on the 19th, we're still going to have some consolidation up and down in the total market cap of crypto, because we have scared money, and scared money just, it sets off the avalanche of fear and paper hands and all the other expressions. And if we zoom in into a 4-hour, we had a bullish, we went up, and it looks like we're going to get a micro bear and continue to, like I said, hold this this area in here. Even though we are coming down into a buy position on the stochastic here on the 4-hour, but this is still indicating a little bit of downwards pressure. And I think this downwards pressure is going to come from the news this week, the tariff wars and things like that. So overall, big picture, still bullish. I mean, on the 3-day, we're still well above the 200 EMA. We haven't even tested it. I mean, we came testing it back here in August, and that was similar fear and everything else going on. And in this period in here, everybody said, you know, the chicken littles, the market is over. We're going down to the 50s and the 40s for Bitcoin. And then we ripped. We absolutely ripped. And we were in that channel. And this is when I was telling you, let's get in the market. And when December came and I said, hey, we're not in a alt season quite yet in dominance, but we had all those runs in alts is what we were seeing. And we're still good to go. And then when we even zoom in on the 1 hour and we get really low, we can see we had critical fear. This why we have this indicator here, which is part of our NFA OFC package, which is our critical fear and greed. At 2.65, we're firing critical fear in the market. And that's typically when smart money starts to enter, and we're starting to see that belly and starting to come up. But like I said, I